completes the lineup, and thank you all for giving up the time. My name is Nawied Jabarkhyl. It's a pleasure to be here and host this session. A tough question, what's next for finance? I guess much of what we've been hearing here today and across the next couple of days is going to be trying to answer that question across a range of topics. Fintech obviously having an impact on different stakeholders, whether they're businesses, some of them represented here, whether they're governments and regulators, or whether they're consumers as well. If you look at what the growth trends say, at least, it's definitely going to increase in the coming years. Varying figures being brandished about, but if you look at Statista, they say digital assets, the market is set to grow by more than 5% in the next 4 years. Digital banks market set to grow by nearly 8% by 2028. So it's heading in one direction, a value of $2.75 trillion, according to Statista, the digital banks market will be worth in a few years' time. A couple of things I just wanted to touch upon before I bring in the guests. The diversity of the market's incredibly interesting. It's not just established financial players getting in on the act, but also startups and disruptors. And I'm very happy to say that we've got a range of those sorts of voices on this panel for you. The other key thing is that this isn't localized, they're global trends across the developing world, across the developed world. We're seeing, particularly with the rise of digitalization, people all around the world moving towards more digital finance. And again, we've got international representation here as well. So I'll bring you in, Jatinder, first of all, if I may. You're here from India, elections taking place there now, the biggest ever elections in the history of elections, up until June 1st, 1.4 billion people. How important is digital finance in India today?
Well, thanks so much, and thank you for asking that question. Yes, we are the largest country in terms of population, which also means it's the biggest market in, for service providers, and so is financial services. Financial services market in India has grown tremendously, especially because of the digitalization and the digital public infrastructure, which is on the identity side, and on the payment side, we call it UPI. But I think the real success story of the fintech in India is credit, digital credit. The financial deepening and financial widening which has happened because of fintechs and digital lenders in India is astoundable. So just to put things in perspective, as you shared some numbers like, digital banks growth by 8% and $2.75 trillion value in few years. To put things in perspective, Indian digital lending market is currently stands around 20 billion US dollars, and it's expected to grow by 25x up to $500 billion in next 7 years. So that's a perspective in which, there's a context in which, digital lending and fintech is important. And then a little bit about Digital Lenders Association of India, which kind of steers industry through regulatory changes to engagement with policymakers on different issues like the technology piece, access piece, self-regulation, which is an important piece, the SROs, self-regulatory organizations. So far we have seen self-regulatory organization, especially focusing on conduct of business part in developed countries, or the countries like UK. In US we have, I think, FINRA, F-I-N-R-A. In Switzerland there is a FINMA. But in India, for fintechs, SRO, or paradigm of self-regulation is coming up. So what does it mean for people of India? Access and timely available of credit on a real-time basis is something which it means, and I'll pause myself here, and maybe in second round I'll add more pieces. Thank you.
And when you talk about that proliferation across the vast population that there is in India, presumably lots of these people haven't had much engagement with traditional banking in the sense that some people elsewhere would have done. How important is that?
No, let me give you an example. Now, about 2004, about 20 years back, we had just 30,000 brick and mortar bank branches in rural areas, and large part of Indian population lives in rural areas, about 70% of them. Now thing has changed, and I'll quote Global World Bank's Global Findex data, which now the latest one, I think 2021 is the latest survey which has been released, and it tells us there are roughly around every household now has a bank account. So basically, bank account is basic requirement for financial inclusion. On top of that, fintech story is developed. So that's what I just mentioned, the digital public infrastructure, the identity stack, the payment stack, now the documentation, KYC. So those things are digital, and that actually facilitates the flow, the access, the deepening and widening of credit. So that was the story to be the question which you asked.
Yeah. Kartik, perhaps a different view in terms of Mashreq, an established traditional bank as it started here in the UAE. Just tell us a bit about the growth journey that you guys have been on and how consumers have responded to that as well. And is it only heading in one direction?
It's funny, we have a lot of fintechs all around us. So I'm going to say something controversial. It's not just the fintechs who have a license to innovate. Banks actually hold licenses, right? And we do innovate. And, Mashreq is one of those banks which has been at the forefront of this. If you look at, let me give you, instead of just saying empty words, let me just demonstrate what I mean. So 3 years ago, my team had around 30 engineers. Today it has 120 engineers, and we can't hire more fast enough, right? 3 years ago, I would say almost 100% of credit card applications that we sourced were either through paper or we collected paper from the clients. Today, 100% of applications, which by the way have grown tenfold, right? None of them do we actually ask for a piece of paper from a client, right? So these are some of the fundamental changes that we have done. And I think these are proof points that these are working.
And not just the fintechs that have a license to innovate. Your company, obviously, TWIG Finance, Karam, set up just to do that in the area of embedded finance. Tell us a bit about what you're trying to do in the industry and how the journey has been so far.
Absolutely. So we are really focusing on embedded finance. Embedded finance is one of the growing trends that we are seeing all around, where providing financial services to non-financial organizations, such as HR, e-commerce platforms, merchants, and other solutions that can bring in an angle towards embedding financials and banking solutions. We are focusing really on embedded savings. So for example, providing merchants who today cannot really accept deposit like a bank, the ability to accept a deposit to enable a future transactions. We see as well a trend where it comes to embedded credits. For example, buy now, pay later are providing those merchants as well the ability to provide credit in a new way that earlier they couldn't provide. And I do believe as well there is in the HR space and the account payable, account receivable, the B2B solutions, different ways to provide financial services to be able either to accept money, provide money, or move money around. And this is one of the growing trends that we're seeing globally.
And Talal, Bayzat's journey a little older than Karam's company. You focus particularly on HR. What sorts of benefits have you seen from taking all of that and putting it into one platform or one area for companies to focus on?
Yeah, so we started Bayzat building a localized HR solution for the UAE and Saudi Arabia. So all your HR processes, your admin processes, but we've always been a fintech at heart, right? So the goal has always been to leverage this HR payroll solution to cross-sell financial services. So today on the fintech side, we manage $2 billion of payroll on 150,000 employees between the UAE and Saudi. We're a licensed insurance broker, so group health insurance is mandatory in this region, so we've really automated that entire process. And recently we've been trying to build the accounts payable stack, right? So that's everything from, of course, payroll, which is the big one, invoice payments, and then corporate cards and spend management. And that's been a very challenging solution. And you said that banks have licenses as well. It would be great if they start sharing them with the startups, because that's been the most painful process, right?
Yeah, I'll touch on regulation because Jatinder also mentioned self-regulation, so we'll move on there in the 20 minutes or so that we have left. But a really important issue, you said $2 billion of payroll. Is it safe to be putting that amount of money, or for companies to be doing all of that into one platform? Surely there must be safety concerns about collating it all rather than having it separated.
Yeah, so the UAE, they actually have a central bank payment trail called wage protection system. So we don't keep the money, it goes actually through. And that was one of the first innovations they made many, many years ago to actually protect employees in the region. And the rest of the GCC countries have followed suit.
But what sort of risk measures do you take to try and mitigate risk in your platform?
So it's actually a payment trail, right? So the funds transfer automatically through the central bank payment trail. So it's not really held by any payroll processor.
Jatinder, you mentioned self-regulation there, something that is really important, particularly looking at the Indian model. Just give us a sense of why we should be able to trust people to mark their own homework when it comes to self-regulation, or is it a necessity given that regulators aren't moving quickly enough?
No, I think that's an interesting question, and many ask in India, even non-banks which are regulated entities, why they should be subjected to self-regulation again. My way of looking at it is this, although there is an umbrella regulation and central bank in India regulates regulated entities, be it banks, universal banks or NBFCs and other banks. But what is important, as I shared with all of the audiences here also, the scale at which digital lending and fintech is going to grow in India is astounding. It's surprising. And that is important because, unless you have rules of games, a consensus-based rule of games, where regulator is, of course, oversight is regulatory, but that everyone agrees. And also, this is true. Maybe regulators also learn on the way because fintech is growing so fast. The evolution is taking so fast. So, self-regulation is something which kind of, as I said, consensus-based code of conduct. They follow consensus-based code of conduct on conduct, especially on conduct of business rules side, transparency, client protection. Even if, let me give you an example, even UK there is something called PRA and FCA, I think, Prudential Regulatory Authority and Financial Conduct Authority. So SRO in fintechs and in other arenas as well largely functions on conduct of business part. The prudential part still rests with the central bank. And this is, and interestingly, Indian regulator being, as I said, they are progressive, benevolent, so that they have recognized, the need. Because you can't, and there are certain stages in growth wherein, you need a sandbox approach, little, unless it becomes so big, so that it becomes systemically important. Till that stage arrives, I think the role of self-regulation and self-regulatory organizations is very important. And let me add just 30 seconds, not just for fintech, India has come up with an omnibus framework for self-regulation for the other entities as well. And hopefully in future we may see more self-regulatory organizations, just like we have seen in other, Western world. So to sum it up, yes, there is a regulation, there is a regulator, but self-regulation plays an important role in a fast-moving industry. So I'll pause here. Thank you.
Thanks. We saw Kartik perhaps with the most high-profile example with FTX and what happened there. Often when things go wrong, people, investors, they turn to the trusted people to get answers and try and recoup their money. That's the government, that's the regulators, that's the central bank. The way it's portrayed at the moment is that there's fintechs on one side, as Talal alluded to, and traditional banks, central banks, governments are resistant for some reason to be expanding and bringing in the fintech space. Do you buy that argument, and why is that separation so important?
I think there are two parts to it. On the one hand, I think regulators have to look at the long-term consequences of getting into something innovative, right? Which, as a small company, you may not, or you are incentivized not to, right? Banks have to follow what regulators say, and therefore they generally need to be a little slower than what you would be if you were a 10% fintech. But on the other hand, um, laying the ground rules actually makes it a lot easier for everyone to innovate. Having the guardrails makes it very clear, having a bright line saying this is okay, this is not okay, right? So if you look at our philosophy at Mashreq, we believe that the future is, let me give you a four-word acronym, right? It's MACH, MACH, which is microservices, agile, cloud-based, and headless. And what do I mean by headless? It means that the bank of the future will not be inside an app owned by the bank. It may actually be, as our friends here are doing, it may actually be in some other app where the client is, where the customer is, and we have to be there.
And we're seeing that happen more, whether it's with the rise of super apps or other players, like you say, the embedded finance trying to take part in that space. Do you think there's enough understanding about embedded finance, particularly when it comes to consumers and the way they're using these services?
There is a growing, let's say, attention when it comes to the embedded finance. It's still a growing segment, but here we can really see a much deeper understanding of the opportunity from the banks and the fintechs, less so from the non-financial institution who are getting this as a new service that is potentially generating a new revenue for them or enabling new operations. And this is where I personally see the partnerships between the banks, the fintechs, and the non-financial institutions. The banks are enabling the access to those financial services. The fintechs are the ones who are able to position those applications into a more customer-centric or to be able to enable more non-financial institutions to access those financials and help in coordination with the banks and with the regulators, the access to the financial services and enable, let's say, a merchant who never received deposits or a merchant who never provided credit before, ways to access that in a very customer-centric way.
And did you want to?
If I may, yeah, I want to react to that. I think there may be situations where that is necessary, but if you look at, and I'm not talking hypothetical, we have a embedded finance partnership with a very large telco, Etisalat in Egypt, right? Mashreq Bank is doing embedded finance. It's live today. So it's not necessary that in all situations we need you, but I understand in many situations
Absolutely.
it would be required.
So, should I come in
Jatinder,
here
yeah,
or
I'm
should
just
I
going
wait?
to, I'll come to you just after I come to Talal, because you made that point, you raised the issue about the need for more licenses or perhaps more support for startups. Do you feel that there is enough support currently, particularly in the Middle East region, when it comes to companies like yours, ideas like yours, and trying to take them and run?
Yeah, I mean, look, when I said that statement, I was just comparing UAE to other countries in the world, right? So I think the most critical piece of the fintech value chain is the open banking and banking as a service providers. And today for them, it's a real struggle. And unless they become stronger, and that's going to be through regulatory change, forcing banks to work with them, then companies like me who are trying to build embedded finance solutions into, for example, software, but there's so many different use cases, we're going to continue to struggle. And when I compare here to other parts of the world, there are other parts of the world where a very small fintech in a matter of 2 months can go live with financial service products. And here you're talking about, a year and a half, 2 years, and you're still grinding away, trying to find the regulatory avenue to get approved, trying to find the traditional banking partner to work with you.
And just to clarify, do you feel that it's overly protective or do you feel that it's overly confusing?
Above my pay grade,
Yeah.
I don't know what's in the
fine.
mind of the regulator, but probably the former.
Great. Yeah, and it's important to have these frank discussions, particularly with the stakeholders here. Jatinder, you were going to raise a point, and then I'll come back to you and ask about how digital lending is changing the landscape for businesses in India. But you were going to...
So maybe I can fuse both of the questions and then I'll reply. So, on BNPL, we have a kind of a debate in India among many quarters, right from market players to regulators to policymakers, because this is a very, what I see is the positioning of BNPL is very important because the sensitivities associated, access to credit is fast, And who are you lending to? You know, sometimes, mostly, because these are innovations, these are new products, whether are you positioning it as a convenience product or a affordability product. And when I say by convenience, say for example, I have an app in my phone, I want to pay for a food service or a e-commerce or a quick commerce, I just click one click, and although I have other cards and other options to pay, but that takes maybe 2 minutes. I don't want to put up my user ID, password, or something, some other details. There's just one click and pay. That's a convenience product. Second is the affordability part of that. Say for example, we have, and that's the landscape of business which digital lenders have shaped up and built up that market. So India has a large pool of young population. We are about 60-70% of our country is a young country, less than 35 years. And when a youngster gets a job, first time job, about 18 to 25 age bracket, they do not have a credit history. Usually they don't have a credit history. And an ordinary salary is like, what, 15,000 to 25,000 Indian rupees, which is roughly how much? Maybe 200 to 250, maybe $300 on an average. Now, a $300 guy also wants a mobile phone. Say for example, $1,000 mobile phone, which helps him to, stay updated. And she also needs a motorbike, a loan for motorbike. But traditional financial service providers, probably because of the structure which we have in place all over the world, will be reluctant, because you don't have a credit history. You are probably a thin file customer. Then it becomes an affordability product. And that's where BNPL comes in. And interestingly, what we have also, we did a lot of work on these things. Australia was the first one probably where BNPL started. Nordic countries have very good record. Germany has the highest adoption rate. But what happens when it comes to, countries like Asian countries? Everyone looks at it with a suspicion. And that's why I said, the kind of positioning becomes very important. Now, putting a temporary pause to that, on the landscape side, as I said, when you get more and more, and the kind of a landscape of digital lenders and fintech providers in India is fragmented. We have a large number of regulated entities, but then equally large number of entities which are not directly regulated by central bank. We call them LSPs, but they follow all the regulations applicable to the principal entity. So it's a partnership, bank and fintech partnership model, and that works fantastic. So the origination of customer, access to customer through digital means, banks have access to pools and loads of money, low cost capital. Now fintechs have understanding of a customer, the kind of the help which they ultimately underwriting and other decisions rest with the bank technically, but they help them to perform those functions, recovery and servicing customers. So these entities which are not directly regulated, the partnership model helps in a fantastic way, and that's a way forward. So
and one thing that's come out from the Indian example in recent years, this move towards digitalization across governments, has been the safety concerns and the privacy concerns. We've spent 20-25 minutes talking about the financial part of this, but the technology part is also important, as you touched on the other day. Are we cognizant enough of the cyber risk and cyber fraud? Let me take that to Kartik, and I'll bring it along for each of you, because you'll probably have different perspectives.
I think that's one topic which is probably taking most of the oxygen in most organizations at this time. So cyber is very important. I think it's a cat and mouse game, as it always has been. The fact that now you have many different tools, whether it's AI that enables you to mimic someone's voice, and tomorrow even their biometric, is that a cause of concern? Yes. But are we already making changes, moving from, let's say, a OTP based authentication to a multi-factor one? Banks will continue to invest in this technology and try to stay ahead of the fraudsters. And I don't think that's changed before. It's just become a lot more pointed, let's say, in the last 5 years, and it'll continue to grow.
Karam, what do you make of the cyber threats? Because if you look at what major entities around the world are saying, it's not just in finance and business, but across the board, we're not taking cybersecurity serious enough. As a founder of a company, what are you doing to try and ensure your products are safe?
I strongly believe that now with the different ways where finance is being accessible, the risk of fraud is definitely increasing. And we've seen different cases where fraudsters are becoming much more innovative in the way that they do fraud. Uh, Even today, for example, I did receive like 2 or 3 WhatsApp or SMS that people are trying to scam in different ways. And with that aging population, there is different ways where fraudster can access vulnerable people and able to scam them in different ways. And it is a responsibility on anyone providing financial services or non-financial services to protect the end customer from that risk of fraud.
And Talal, thanks, Karam. Talal, you mentioned that your company has operations in India and Turkey as well in terms of wider support. Is talent an issue, do you think, if we move towards what's next for finance, this push towards digital finance? Are there enough people to be servicing that worldwide?
Yeah, I mean, I believe so. Obviously, finding talent is always going to be challenging when you're trying to build a company. But for the most part, fintech is a sexy space. A lot of people want to work in fintechs. So from that perspective, you are able to attract good talent, and especially now that remote working is pretty common across the world. There's no reason why you have to stick to your country of operations to hire people.
And obviously, traditionally, India has played a major role in servicing the IT revolution worldwide in recent decades. What role do you think it's going to have moving forward? And if you could just let me know your thoughts on cyber fraud and cyber risk, because that's an important issue as well, particularly for the association you head up.
No, I think you asked a very pertinent and relevant question, and even in this conference today, right from the plenary, before coming to this panel, I was on a round table and we discussed almost same issues. But last week, the government of India, the very high level interaction with law enforcement agencies and from officers from different pertinent departments, including regulators, and we were invited to make a presentation on what could be done. I think very positive piece is that governments are also the government agencies. They realize that they need to work with the industry to resolve this. However, you can't eliminate these things 100%. You can mitigate it. Part B, fraud was always there. We remember, there was a time when there was no much proliferation of digital things, and then we used to put up signatures on checkbook and people used to forge that signatures. Now that has moved an online world now. What we have done as an industry association, we work closely with the regulator and other big players. So we brought all leading players together. We said, hey, look guys, this is your business. This is a common good. You pledge some resources and your time and pledge for these things. So the pledge has been there and people are investing into, our members are investing into this. What is more important is what we realize is that awareness is something which plays a critical role. Interestingly, one series of Netflix, we call it a Jamtara, maybe Kartik remembers that. The Jamtara is an area where 90% of cyber fraud emanates. A small place where virtually every youngster is a fraudster. So that series of Netflix created much more awareness basically on cyber frauds than any other things in the recourses. So awareness, pledge, working together with the government agencies and using AI and ML models and the technologies. I think an eclectic approach is something which we are adopting in India, and we see the rest of the world as well.
Yeah, and a collaborative approach. I think what we're hearing from the panel here is a range of perspectives, obviously the founders, the associations, the fintechs, but also the more traditional banks pushing their way ahead as well, as Kartik said. But the one thing that does come to the fore once and time again is that there needs to be more collaboration and more working together, more talking together, at least from governments, regulators, businesses, and fintech as well. We'll leave it there because we're almost out of time, but thank you very much for the fascinating discussion for all of my guests. Jatinder, Handoo, the CEO of the Digital Lenders Association of India, Talal, the CEO of Bayzat, Karam, the founder of TWIG Finance, and last but by no means least, Kartik, Taneja, Executive Vice President, Head of Payment and Consumer Lending at UAE-based lender Mashreq. Thank you, gentlemen, and thank you.
Thank you so much.
Thank you.